Hello everyone, Pocket Programmer back with you. Here is another round of how to get rich at a reasonable pace. Last time I kind of gave you a little bit of an idea of where the money can come from, and I've shown you before a little bit of what getting rich looks like. Now I want to go into a little bit more detail. So basically it comes down to this. There are two things you need to do to get rich at a reasonable pace, and that is to sell covered calls and sell cash covered puts. I'm going to say that again. And any research you want to do on your own, that's totally up to you. There's so much information out there on the web. But it's selling covered calls and selling cash covered puts. That's it. That is the secret to getting rich at a reasonable pace. So I just wanted to look back at a little bit of history of what I've done with my accounts. I'm just going to explore two things today. One, mostly from a long time ago, but I did something very recently with it. And one thing that I've only done recently. What do these things look like? So here's historically what it looks like. If I look at Ideanomics, IDEX, 99 cents a share, that doesn't look like much. But if I go back down into my history, you can see what I have done with Ideanomics. So starting from the bottom up. So you can see December 7th, 2020, my first foray into Ideanomics. Minus 210.81. Now these are always going to be lots of 100 shares. So it was about $2.11 a share. That's how much it cost me to get 100 shares. Now if you're looking at that and saying, wait, you spend over $200 for something that's worth less than $100 now, how is this getting you rich? Well, I'm glad you asked, because we need to follow up with what happened to the rest of this. If you look above that bottom line, you see IDEX $2 call, 12.18.20. That means I sold the $2 call option with expiration date of December 18th, 2020. Now you'll notice I sold that on December 7th of 2020. That actually happened roughly 1 second after purchasing the stocks. That's how quick the turnaround is here. And you can see I got $40. Basically what this is saying is I can sell these stocks for $2 a share, and I received $40 for that privilege, let's say. So as long as IDEX did not go down below $2 a share over that 11-day period, I was going to get $200 for the stock that I purchased, plus $40 for the premium. So $240 minus that cost of $210.81, that's a little over $29 made off of a $210 investment over the course of 11 days. Just real simple math. That's way over 10% in 11 days. Imagine what 10% every 11 days would mean to any starting amount of money. If I could guarantee that, I wouldn't even be bothering making this video. I'd be keeping this to myself. Doesn't always work out that way. A lot of times it takes longer. Other things can happen, but this is what it can look like. This is the goal, if you will. All right, next line up. You'll notice, I'll move it to the bottom now. IDEX limit buy, minus 197. The price had gone down. I purchased another 100 shares. And you'll see I got another $40 premium, this time for the 250 call. So my potential for increased growth there is even better, and I still got the same premium as I did when the price was a little bit higher. Then you can see we had the $2 expiration, 0. That is now at the bottom of your screen. That's just saying that it expired and it was below $2, so I kept the stock. And then you can see on the next line, on December 21st, I sold another $2 call at a $30 premium. And then above that, we have call assignment, and above that, another call assignment. So $200, $250 minus a penny. I don't know where that penny went. Frankly, I don't care. It's a penny, like a literal penny too, not a penny per share, a penny. So that was me basically getting back more money than I paid for the stock, in addition to 40 plus 40 plus 30. I got $110 in premiums, plus the growth on the stock. And if you look at the end of at least this one cycle here, that's January 15th. I started on December 7th. I finished on January 15th. And as I'm holding my phone here, I can't do all these computations right now, but you can do the computations for yourself. However you look at it, that's a little over a month, and it was a lot of money. Granted, this is one of the more profitable ones. Put your best foot forward. They don't always work out like this. If I could find it, I would share a story of a stock that I had that lost about 33% over the course of 2 months. I still profited $8 off of about a $700 investment. That's not a lot, but it's still a win. And that's what I love about this is as long as you're willing to just hold on and keep doing it, unless a company goes bankrupt, you can't ever actually lose in the long run. Big asterisk. Obviously, there's a possibility, but it's so extremely unlikely. Anyway, moving on. I loved IDEX so much that I purchased again, even though the price was way up, $317.74. That's over $3 a share, $3.18 a share roughly. Have a couple things here canceled because, I was trying to sell calls at certain prices and it wasn't getting picked up. I was probably trying to sell at about 50, wasn't happening, so I lowered the price to 45, and you can see once I lowered it to 45, it got picked up right away. I like to get my options. I don't want to hold on to the stock a lot of times. I like to just get my options sold and take what I can get. So sometimes I'll price them a little bit higher than asking or the midpoint and then lower until somebody picks them up. But you can see what happened. I received $45 in premiums, which is a very high percentage. And then if you can see on February 19th, which was the option expiration date, there's $349.99. That's $350. So I made $32.25 off of the increased value of the stock, plus $45 for the selling the covered call. And once again, that is a very big success, and one of the better stories in my investing career. More recently, a couple have canceled trying to sell a cash covered put. When I started this, you saw IDEX down to 99 cents a share. I had sold it at $3.50. 99 cents a share seemed kind of low to me. I also didn't have a lot of money to play with at the time. So what I did is I sold a cash covered put. This is not going to be an exciting investment. If you look at the one in the middle here, it says IDEX 0.05, put 318, and next to it plus $1. That's saying that I sold a cash covered put. As long as the price does not go below 50 cents a share, all that happens is I keep my money. If it goes below 50 cents a share, I have to buy 100 shares at whatever that price is. The price was like 88 cents a share, I think, when I made this. So the fact that I could even get $1 on a 50-cent put, I thought was kind of a miracle. So I put down $49, I got $1, and then about 2.5 weeks later, it expired, and I kept the $1. So that's like barely over 2% gains. But again, barely over 2% gains in 3.5 weeks, that's pretty good. Even if you got 2% every single month, that's 24% for the year. That is way ahead of what almost everybody does in the market. So don't look for really, really huge gains with this method, but do look for consistent gains with this method. All right, let's look at one other one real recently. Hexo. The reason I want to talk about this one is if I look down at my history, I have a put, canceled, another put. That first thing under where it says older, that's something I'll have to talk about in a second. But then put, and expiration. I've never owned this stock, ever. And yet I've made money off of it. And that's one of the things I love about the cash covered put, is you can put money down and basically be willing to buy a stock and never have to own it in order to make money off of it. Working up from the bottom again, Hexo 50-cent put. I put down $44, and that's what that plus 6 is about. Somebody gave me $6, and then Robinhood held on to my $50 until this was over. So on January 26th, I did a February 18th put, and if I had waited until February 18th, it would have expired, and I would have just kept all $50. That's a pretty big growth on a small amount of money, but still percentage-wise, a pretty big growth over a small period of time. The reason you see that -2, I actually bought back my put, not because I didn't think it was going to work, but I bought it back at a reduced price. So I still profited $4. I actually needed the money for something. So I took the money out, I used it, and then I got the money back in when I didn't need it anymore. Moving up to more recent time, I did a 50-cent put again with the March 18th expiration. Notice I did that on February 22nd. That plus 5 means I put down $45. Whoever purchased this from me put down the other 5. And then as the expiration got even closer, I still liked where Hexo was at. So I got $2 on a 50-cent put just 4 days before expiration. So short periods of time, you can actually still make some money. So grand total, just from February to March, so between February 22nd and March 18th, I put down a grand total of $93, and I made $7, which, probably, 8%? I'm trying to do some quick estimation in my head, and that's great. If you can consistently get 8%, you will get pretty rich. I don't want to say quick, that's not the point. You're going to get rich at a reasonable pace. So again, they're not always going to be winners like this. But if you try it yourself with small amounts, with stuff that you're willing to lose, I think you'll be surprised at how little you really do lose. So go ahead and give it a try. If you have any questions, comments, whatever, go ahead and put them in the comments below. Don't forget to like and subscribe and all that good stuff. And I will see you next time.